And so now Bitcoin now hits all 3 points in that triangle: scalability, decentralization, and security. It's like a holy grail. And therefore, the smartest people we know are putting everything they have into Bitcoin right now. GDP is actually collapsing. The only tool left of central banks today is to print more money, and you end up in a death spiral for fiat currencies.
Today, we're going to talk about Bitcoin. Myself and Salim have been tracking it carefully for many, many years. Salim, I got my first Bitcoin in 2012. And it was, I mean, nobody was talking about Bitcoin back then. And then most recently, we've seen an pretty incredible run up back into the 40s right now, which is still a down point from 69,000 last year. But I was really curious for us to maybe get together, talk a little bit about what we've seen in this space and maybe what the future holds for Bitcoin from an exponential technologies and an EXO perspective. So you want to toss something in there? Let us know what you think.
Yeah, we have 200 fiat currencies in the world. And right now, the US dollar is fairly dominant, but the US dollar has been weaponized over the last few years from countries they don't like. And people are moving off that dollar. The second aspect, I think, is really important to go back to the roots of fiscal currencies and the fiat system as we know today. You go back to the early 70s when we first floated the US dollar off the gold standard. And what people didn't recognize at the time was actually Moore's law. Um, we had always built this when we floated off the gold standard, which was this stable platform, but you couldn't really issue debt very well against it. But because the economy was growing, if you create a debt-based environment to grow the economy, that actually works, unless technology is deflationary. And they didn't realize, and they probably couldn't have known that technology was deflationary. Today, the $1,000 TV you buy is worth $500 in a year, and that same TV can be bought for $250 a year later. Well, if I borrow $10 million to make a bunch of TVs at $1,000, and then I can only sell them at $500 a year later, it doesn't work for me to take that debt. And Jeff Booth, in his book, The Price of Tomorrow, made this observation that I think is unbelievably powerful, which is that over the last 40, 50 years, every dollar increase globally in GDP has come with a $4 increase in global debt. So we're basically growing the global economy with debt, which is structural and can't be paid back. That means at some point that whole thing's going to collapse on itself. This week, I think we hit that inflection point where the interest payments on the US debt are now higher than the cost of the US military. Right? That is a mind boggling number, especially when you consider the cost of the US military. So this whole thing is starting to now start to implode, which means people want to be in assets. When you look at, say, asset prices and stock market prices, which increased radically over the last few years, it's not because there's underlying increased productivity. It's just we printed a ton more dollars, and therefore, obviously, that's going to happen. So I think there's this massive transformation happening from debt-based fiat currencies to something else, and it looks very much like Bitcoin is that something else.
You know, we talk about S curves a lot, right? Kicking the curve and growing exponentially. And I see these pictures of the printing of US dollars, and I don't think that's supposed to look like an S curve, but it does in the last year
Yeah,
alone.
I mean, since the pandemic, we printed almost 50% of all the US dollars in existence, right? Now, if you print 50% of all the dollars, of course, prices are going to rise 50%. And everybody's worried about inflation. How the hell are you not going to have inflation when you just radically increase the money supply? So there's this incredible shift happening, and people aren't recognizing it. But now what is it? The chickens are coming home to roost. Is that the phrase?
Yeah,
Um,
that's one good one. I'm thinking payback is hell. Payback is hell.
But this is like a really bad time to be in US dollars or any fiat currency. In fact, all the others are worse than the dollar. So the dollar will do okay in the short term just because everything else has so much more debt to it. But in time, that's going to collapse. I remember asking Jeff this question: when do you think this collapse happens? And he's like, when do you expect, which snowflake is going to cause that avalanche to occur? And we don't know. But at some point, it's going to happen, and all those snows laden up and the snow's falling, and at some point it's going to go, and it could be like this year as the people start to recognize that that debt payment is a massive issue, and then there's a flight. And Bitcoin was actually created as a hedge to the existing fiat system, which is why. So I'm in the maximalist camp that thinks Bitcoin goes to $1 million of Bitcoin. Therefore, when it's 40,000, if it's 30,000, 20,000, your upside is up to 1 million and your downside is down to zero. It's the big, as Vincent Durrani talks about in our ecosystem, it's the biggest asymmetric financial bet in the history of money.
Yeah, I couldn't agree more. Initially Bitcoin was created as a peer-to-peer cash tool, right? They wanted to replace cash, but only about 2% of all of the adoption of Bitcoin around the globe is being used for, say, regular day to day transactions. That point that you make about it as an asset and an inflationary hedge is really, really important because I think we haven't even begun to see. In fact, I think I saw a tweet today. You better buy some Bit. Again, this is not investment advice, everybody, but you might want to buy some Bitcoin before BlackRock buys it all. You
Yeah,
know, so there's a reason he's saying this, not just because he owns $5 billion worth of Bitcoin, but he's been pretty open about his ideas and his thoughts. Did you just watch the presentation he put out?
Michael Saylor.
Yeah, a couple of days ago, Michael
Yeah,
Saylor.
I did, and I've seen a lot of his presentations. I'm obviously a huge fan. He's probably the most articulate person in the world on Bitcoin overall. In that talk, he went back like 100 years and talks about how much the dollar has collapsed in value. It's something like 97% over 100 years, right? And so therefore, it goes back to the debt-based kind of system that we're in. Um, you increase the money supply and you hope to grow the economy, but if technology is deflationary, you're increasing the money supply and not growing the economy, right? Because GDP is actually collapsing or falling because of technology deflation. And that causes a perfect storm. The only tool left of central banks today is to print more money. So that makes them print more money, which just then accelerates the whole cycle, and you end up in a death spiral for fiat currencies. Um, it's literally a an arbitrage against smartness, right? Like the smartest people in the world I know are putting everything they know into Bitcoin. And I want to take a minute and explain why this is so powerful. Imagine a triangle of 3 points: decentralization, security, and scalability. Okay, those are what you need in a digital currency to make it work. When Bitcoin came along, it solved for security and decentralization for the first time in digital money, and that got people very excited because nobody had ever solved both of those at the same time. Okay, however, it did not solve for scalability at the time, and therefore all the other altcoins tried to solve for that. Cardano, Solana, Ethereum, you name it, and they try to be very scalable. But in being scalable, they compromised on either the decentralization or on the security. And we saw that with Luna, we saw that with FTX, Binance to some extent. You can't have a centralized exchange that has a token. It's going to collapse at some point. However, so there's this scalability issue with all the altcoins. However, in the last 2 3 years, with the advent of the Lightning Network, Bitcoin now becomes scalable, and so now Bitcoin now hits all 3 points in that triangle: scalability, decentralization, and security. It's like a holy grail, and therefore the smartest people we know are putting everything they have into Bitcoin right now.
I was just going to say the Lightning Network has seen enormous growth in 2022 and it has only continued in 2023. In fact, they also upgraded the security of Bitcoin in general, including the Lightning Network, with something called Taproot back in 2021. And so all of the problems, if you will, with the earliest implementations of Bitcoin going all the way back to 2010, they've pretty much all been solved. And now you see a lot of banks talking about CBDCs or central bank digital currencies, but those are really following many years in the wake of all of these altcoins that you were just talking about, I would think.
Well, I mean, all the CBDCs are essentially taking all the issues of fiat currency and digitizing it so it moves faster. I mean, it's just the worst idea ever. Plus, you give your all trackability to the government in terms of what's happening to what money, right? People think about Bitcoin as being used by drug dealers, but actually, the $100 bill is the drug dealer's weapon of choice because it's not traceable, it's truly anonymous, and it's redeemable. Whereas digital currencies, you're actually trackable via IP address and other methods, wallet tracking, etc. And therefore, we call them pseudonymous, not anonymous. And so you don't want to do a crime and have crypto as the outcome.
Well, this kind of brings up the specter of regulation, and Bitcoin has a fairly interesting position in US regulatory, especially, and really globally to a degree, of being one of the only digital currencies that's actually currency in a lot of places. So, we've seen the experiment in El Salvador, for example. That isn't reported to have gone all that well. However, I applaud them for being early and being first and knowing that they were going to stumble and kick around a little bit to give it a try. So that's a CBDC, but it's Bitcoin as CBDC for the government. Now, again, there's all kinds of interesting things published about this that are negative, but I really was impressed by their willingness to give it a go.
This is also, you have to be careful, right? A lot of the press is on the behest of some of our large organizations, like the IMS is freaked out by this. Because if multiple countries start adopting Bitcoin, the entire global hegemony and the dollarization essentially evaporates. And they're freaked out about that, understandably, right? Now, when you go to El Salvador and you talk to the people transacting in Bitcoin, they actually love it. They're like, "This is great." It's like the Indian system, where they've gone and digitized the rupee, and we have the whole Aadhaar system. And India's done, by the way, a brilliant job of decentralizing and creating an API structure so that any merchant in the country can take any wallet from any other person. Something like 500 million people are using that system in just a few short years. It's an incredible effort of propagation, but that doesn't take away from the fact that it's still the Indian rupee, and that has suffers with the vagaries of that. That's down, by the way, about 40 to 50% against the US dollar in the last 10, 15 years, right? So in El Salvador, they were using the dollar anyway. Therefore, they're subject to the issues around the US dollar no matter what. And then they just flipped over to Bitcoin, which I think is super smart and gives them unbelievable potential going forward.
Well, I made a list. China, India, Brazil, parts of the EU, the United Kingdom. There are reportedly up to 130 countries exploring variations of CBDCs, and only a small handful of those doing like El Salvador did and looking at adopting Bitcoin. The U.S. is one of those. The U.S. appears to have no, at least not that I'm aware of, any current intentions to adopt Bitcoin as its national currency. You got to wonder because you said something really interesting. The rupee's down against the dollar, but look at the dollar against Bitcoin.
Yeah, no, it's way. I mean, this is the point, right? Um, at some point, I remember talking to Jeff about this, saying, "What? How do you see this working out?" And I think of Jeff as the chief economist of the abundance era, right? He's got the brain to think about what does macroeconomics look like as we flip over, because our current systems are focused on scarcity and measuring the economy as scarce. And Bitcoin and digital currencies and cryptocurrencies actually measure and help you manage abundance, which is what exponential organizations are built for. Um, and he said that it'll flip over when people start saying, "My house isn't worth $300,000; it's worth 5 Bitcoin." Right, and I actually see that. When you go to Discord channels of all these NFT communities, and there's all this buzz and activity around in the younger generation about trading NFTs, you never ever hear the word US dollar. You only ever hear Ethereum, right? So there's now a generation of kids growing up who don't use the US dollar as their means of exchange for popular things. That's freaking nuts. And it's a complete unique phenomena that we've never seen in 200 years of the US country as a country.
Okay, so we got Generation Z and then Alpha, right? So we're coming up on Generation BTC. Maybe,
Generation BTC, that's a good brand.
maybe that's what's coming. The last thing I want to talk about this time is around volatility and war. So, two topics. So, Bitcoin's volatility is reputed to be insane. And, you all hear stories that, oh, I bought Bitcoin at $69,000. I'm down 100% or what have you. And they've been burned. So, it is true that Bitcoin has a certain amount of volatility. But what people fail to do sometimes is measure that volatility against all the other currencies out there to see just how volatile it is relative to. What are your thoughts around that relative to what we've discussed?
The best way framing I found for talking about Bitcoin is digital gold, right? Now, the problem with gold is you don't have limited supply. You can actually mine gold very easily, and there's lots of people doing that. The Bitcoin is digital gold with a limited supply of 21 million coins actually makes a huge amount of sense. And when people think about the volatility, all that volatility is against as a gauge of how is that hedge doing compared to the major global economies. Now, as the major global economies start to collapse because we've printed all this money, et cetera, Bitcoin starts to then appreciate more and more. And because it's liquid and fungible and all the other good stuff that you want in a currency, then more and more people rely on it. I mean, not by accident are Argentina and Venezuela the two most active Bitcoin countries in the world, right? And so there's as we move away, as you consider a flight to safety, as any volatility like war, etc., is very good for Bitcoin because it's predictable. It's mathematically, algorithmically predictable. You don't have to trust anyone. And this, I think, is the fundamental root of this. As Jerry Mikulski in our community said, um, scarcity equals abundance minus trust, right? To really get to abundance, you have to solve the trust portion. And Bitcoin, you don't have to trust anybody. It's trustless. It's there. As long as people rely on it, it'll work.
Yeah, you might want to be careful with where you keep your Bitcoin and trust, because that can become quite a problem. You mentioned war. I was talking about war just a little bit ago. We have a couple of major confrontations going on in the world, and I haven't seen a lot of coverage about what Bitcoin could mean to that, relative to that, tangential to that. What is it? What do we? I mean, you just said something I think is very interesting, that war is actually good for Bitcoin. I hadn't thought about it like that. Maybe we can expand on that just a little bit about what Bitcoin could mean. And I know we're projecting here to the future of the Middle East, or what's going on in Eastern Europe.
Well, I mean, the current wars and the last, say, 30, 40 years of wars have been completely fought over oil, right? These are petro wars, Iran, Iraq, et cetera, et cetera. Um, the reason that Russia invaded Ukraine last year was that because of their exports, 70% of Russia's exports are oil and gas. Okay. Now, as you get to abundant energy via solar and fusion and nuclear, because we're moving heavily to renewables because we have to for the climate and other reasons, and it's just cheaper now, um, his oil reserves become worth very, very low. The calculation we ran is that the price of a barrel of oil should be in the $14 to $18 range. Now, the reason he has to invade Ukraine now is in a few years, his oil and gas reserves won't be worth much. So he had to do it now. Now that, and also, of course, the wars have a convenient way of jacking up the price of oil. Once we get through this burst of it, and because of that extra cost, it's even funding more renewables and more renewable projects. As we get to that transition, over time, we won't be needing that, and therefore, you won't be needing scarcity-based currencies like the dollar, which you could think of as a petrodollar. Right. And so now in a new world, becomes become more volatile and impervious to warlike actions, which I think is really interesting.
All right, so that I think we should go ahead and wrap on today's discussion around Bitcoin. I hope that if you're watching this and you found this interesting, you'll leave us some comments down below. Tell us what you think. Ask us questions. Let us know. We'd really like to hear from the community out there. And also, if you like this kind of content, please hit that subscribe button so that you'll know the next time we upload one of these conversations or other content. Okay. So thanks, Salim. Really appreciate your time today. I know you've been on a crazy world journey, so really appreciate you setting aside the time today. Talk soon.